Major U.S. averages paired gains Thursday on a number of M&A headlines. Now, Keith, to you, do these M&A headlines serve as a leading indicator for better economic times ahead, or is it more companies seeking growth in a lackluster environment?
Well, I think more of the second point, because they're having trouble getting organic growth because of the lackluster global economy. And the U.S. economy, while we're trending positively, there's still not that great growth that we saw back in the 80s and 90s. They've got a lot of cash on their balance sheets, we know that. Certainly American companies are looking for ways to repatriate that cash and do some deals, and I think we'll see that in a lot of M&A deals coming in 2013 for sure.
And tomorrow we've got some closely watched data points as well as options expiration. Do you expect to see a breakthrough key levels or more of a sell-off ahead of the long weekend?
You know, I think people will just hold their positions, and we're not going to see much out of the options expiration or any kind of data that we get tomorrow. This market, to me, is exhausted. We've run very far, very quickly inside of the S&P. The S&P is tracking at 5-year highs, and I'm actually quite amazed that it's staying up here. There's a lot of internal indicators inside of the market that tell me that the price action is broken and we should be pulling back, but there's so much money plowing into the equity markets that people are chasing return, and that's why we're up here. So I don't think anything that we see tomorrow is going to have really a dramatic impact on the indices going into the long weekend.
And there's, of course, been a lot of talk about buying on dips. Do you see the recent dips actually attracting a lot of money from the sidelines?
Yeah, you can see that in the price action. I mean, when they come in, people, again, they're chasing return. The bond market is not giving you anything, has it for some time. People are talking about the great rotation out of bonds and equities. We really don't see that in a large fashion, but if you take a look at the equity markets, we're up 12 to 13% in 2012, and they're trending very nicely in 2013. Money is going to pour in there, and they're going to chase that return.
Thanks, Keith. This is Andrea Say reporting for The Street.